when I first introduced the concept of trading to my parents, to my mom in particular, she went away, she done her own research, and she came back to me and said that is gambling. And regardless of what proof, information, results I can throw at her, she just still said it was gambling. I mean, now to the day, she kind of started to stop saying it's gambling. I mean, she still says it's gambling actually. I think now that it's became more accessible to the general population, people that didn't know much about it like back then, like still kind of just a bit naive unless they take the time to find out much more about it. Let's kind of differentiate the misconception of trading being a form of gambling. So what is gambling, for example? Gambling is basically taking a risky action in the hope of getting a desired result. With gambling, you have no probability in your favor. It's just basically pure risk speculation that if you take this action, this step, you might win that dream unicorn that you've always been hoping for. Like the lottery, for example, that's a pure example. That's the best form of gambling there is. There's like a 1 in 10 billion, whatever the odds are, chance of you winning the lottery. That's pure gambling, skepticalism right there. Whereas in Forex, which is in trading, you have probability in your favor. The market moves in two directions. It moves up or it moves down. Yes, some people might say the market goes sideways, which is a form of consolidation. But when you say sideways, it doesn't literally flatline at one particular price and just go sideways. It still goes up and down. So inevitably, the market goes up and down, meaning that from the start you have a 50-50 chance of winning or losing. Let's take the casino industry, for example. The casino industry makes a lot of money, and they make a lot of money for a reason. They have a strategy, they have a plan that says that over time, regardless of however many people win on a particular night, on a particular week, how much money they lose from the casino from people winning, they know that over time they will make money because all the games that they have made that are created in the casino have strict rules that once applied, they're applying their edge that they have over us as an opportunity. So I'm going to explain all this in a minute. As a professional trader, then you know that you have an edge, you have a strategy, a plan that you go into the market. So now you're the casino and you go into the market to find opportunity, whereas a casino, I'm the opportunity, and I go into the casino as the opportunity for them to execute their edge on me, their rules and strategy on me to make money from us in the long term. Whereas, as I'm saying, in the term of tradings in Forex, I hope this comes across and makes sense. Whereas in the form of like tradings in Forex, I'm the casino and I'm going to find when opportunity arises, I'm then going to apply my plan that I've tested through past opportunities or past historical opportunities that I know that over time, once I apply those rules and just trade my plan, I will make money in the long term. So let's take a game like roulette, for example. In the casino, you have the color black, red and green. The fact there's the color green reduces the chances of a 50-50 between red and black to a 33.333% chance of winning, which is not 50-50, meaning for you to find a profitable edge in roulette. I'm not sure if there is one. If there is one, then well done to that person that found that edge, but I doubt it, because if there was an edge and everyone applied that edge, and the casinos will eventually go out of business because they've lost their edge in the industry. So in trading, as I said, you have a 50-50 chance period, and you can then enhance that chance by adding your edge to the market. So an edge can be simply either reducing how much you lose whenever that 50% chance of you losing occur, and increasing the amount that you win whenever that 50% chance of you winning occur. That can simply be done by introducing a 2-to-1 risk to reward, meaning that you lose, if you lose, you only lose 50 pips. If you win 100 pips. So right there and then you can have a 50-50 win to reward, and eventually, and you will make money over time, because whenever you lose, you're only losing 1%, and when you win, you're winning 2%. Now, obviously, if you know about trading, you'll understand the whole concept. But if you're new to trading, you know nothing about the whole 1-2%, blah blah blah, then hit the link below. It'll take you to an educational course. Read up about it and and just go from there. But we're not going through education right now. We're going through the whole concept of gambling. There are multiple ways to apply your edge in the market. There's the one I just explained with applying the 2-to-1 risk to reward. There is things such as waiting for a particular candlestick formation, waiting for price to get to a certain level, waiting for certain indicators. There's loads of there's tons of different ways. I've also got some books up here of different pattern recognition. Like, there's so many different ways to find an edge in the market. And all it takes is for you to think like a casino and say, okay, I'm going to apply my edge, my strategy on each of these opportunities. I'm the opportunity when I walk into the casino, and when you as a casino walk into the market or the place of business, you're applying that edge that you have to become profitable in the long term. Now, the same way the casino can be disciplined in applying their edge for years. Like the casinos have been doing this for years and years, and when have you ever heard a casino gone out of business because they've lost money? Like, I think it's very, very rare that happens. You hear about a lot of traders that never make it, like 90% of traders never make it, but that's because they can't apply their edge for a long enough period. They give up, or they change their edge like midway through it not working. The casino never changes their rules or their strategy. They have always stick to that strategy. If you go back 50 years how roulette was played, yes, there might be some slight minor adjustments, but it's mainly the same concept. There's 3 colors, so many, I think it's 36 different numbers, and 4 different, I don't know, I don't gamble, so I don't know that. If you wanna gamble, I think the Forex market is a better way to gamble, because as I said, from the get-go you have a 50-50 chance, whereas in the casino, most of the games are rigged against you, so you do not have 50. I don't think there's any game in the casino where you have a 50-50 chance. So how are you meant to be profitable long term if you're gambling? But if you're interested in finding your edge in the market, and you want to find an edge to apply to become profitable, to become a pro trader, as you like to call it, then hit the link below, learn how to trade. That's where I learned to trade from, and you'll also find more about this lesson on creating an edge and the concept of probability and gambling as well. So if that's something of interest to you, hit the link below and learn more about Forex and trading. And as always, thank you guys for watching the video. If you did enjoy, and if this video is something that you're interested in, then I'll be making regular videos of this kind of topic, this kind of niche. So make sure you subscribe to the channel for more videos to come, and I will see you guys in the next one.